Hello, everyone. I'm very excited to be here. We're going to have a great session. Hi, Ashley. How are you?
Good. How are you?
Great. Could you please keep admitting people in?
Absolutely.
Because we are a few seconds away. Oh, now it's the time. So we shall start. Let me load up the slides for this exciting presentation about how to set up your own fund and how we help you get it all done. And during this session, I will take some questions periodically. You can put your questions in the chat, and periodically I will open it. I'll ask Ashley to read whatever questions you have for me, and we'll take them from there. So here I'm loading up the slides. And without further ado, let's get started. So this is Cherif Medawar's real estate investing. We go by CMREI. You can check cmrei.com, our website. So you have an idea about my background. I'm a real estate fund manager. I've been in the real estate investing business for over 40 years. I worked for a billionaire. That's how I started. I was very young. I was in my 20s. I'm also an author. I wrote a book called Blue Ocean Opportunities in Commercial Real Estate, and I've been educating people for the last 25 years. Actually, we have over 2,000 videos on YouTube. We have the most success stories out of any education company in the US. You can verify for yourself and see over 1,000 videos of people saying they made money with me, they used my systems, they invested with me, etc. So the whole idea here is to solve your capital challenges. You need money to do deals, and you need good deals to deploy the money into. So I'm going to explain to you the difference between real estate funds, syndications, joint ventures, and partnerships. And I can tell you that no matter the type of assets you're going to buy, you can create wealth in 4 stages. And I'm specifically talking about real estate here. You're going to first need to acquire the asset. You have to get it. So when you acquire the asset, you need cash, you need money. You, number 2, have to increase its value. Its value is increased usually by doing some work in it to increase it, to sell it for a cash out, or to do some work in it to bring tenants, to bring it increased cash flow. And with the increased cash flow, it increases its value, its price. And then number 3, you want to access that cash. And when you raise capital from investors and you do what's called an equity fund, that means you're sharing profits and losses with them. What happens when you access the cash, if you refinance to access the cash, by law, you have to give them the money. But I'm going to show you a better structure that I've used for 17 years. And we've trained many people, set up many people where you can set up a debt fund. So when you increase the value of the properties, you can access the cash by refinancing or selling and roll the money forward into new deals and bigger deals. So the investors get excited because you're doing all the work, they're growing with you, and you are able to create a legacy for yourself and your family. And that's how you grow with your investors. So really 4 stages: get the asset, increase its value, get the cash, and repeat the process. The investors grow with you and you get to another level completely in life. I want to explain the current situation in the United States. As you know, we have a market that has interest rates that are a lot higher than we used to see in the past. The inventory continues to increase. We expect a lot of commercial properties to come on the market. This is very interesting for us because once the commercial assets don't perform, they sell at a real reduced value because the banks don't want to hold them. It's not like a home. When they foreclose on residential, they know they can list it with brokerage firms and sell it. I mean, if they foreclose on a hotel or motel or storage facility, the banks, they don't have the know-how to operate these type of businesses that are in the commercial properties. Huge opportunities once you know what you're doing. There is less demand. There's a lot of people apprehensive about what to do in the current market, and the lenders are a lot tougher, including hard money lenders, by the way. And you don't want to use much of that because once you learn how to work with investors, you will learn that investors on their own, they really can't make things happen. Why? Because cash is needed for residential and commercial opportunities. Why? Because the big funds are now buying and competing with us. It used to be that you can go in a market, do some residential deals, etc., or a couple of commercial properties. Now you have big players coming in, North Dallas, Atlanta area, etc. So the idea here is to understand that the current situation is if you're by yourself as an investor, you're very limited with the cash that you have. You could see the opportunities, but you don't have enough money. So where is the opportunity? The opportunity is the number of great deals are coming on the market, and there are very few cash offers and very few creative structures because people either don't have enough cash or don't know how to structure these creatively. So that's what we've been doing for years, is helping people learn about real estate, apply, create these creative structures. And now we help them create real estate funds where they can group investors together to go and get these deals for pennies on the dollar, or get deals that are paid full price, but they have a huge upside that nobody's tapping. So the market is an opportunity to put great deals together and work with motivated sellers. You have even syndicators. Syndicators are those who set up funds, set up their own structures, individual structures, to group investors' money and go into one asset. A syndication is one when somebody sets up, let's say, an apartment building. I want to buy a multifamily. So they set up a private placement memorandum. They file with the Securities and Exchange Commission with an attorney, cost them, I don't know, $35,000 or even less, whatever they can do. And then they can go and raise the money and buy the apartment building with the hope that they can kick some low-paying customers, tenants, and they can actually increase the prices, remodel some units, and make money. Well, when the interest rate came up, what happened is they couldn't refinance and go into the long-term loans, so they started selling at losses. Those are motivated sellers. You could see, I heard that last year, I was reading on actually Facebook statistics, they were showing that there was over 3,000 apartment building syndicators that just sold for pennies on the dollar. So if you're setting up now, you can actually take advantage of private lenders that are foreclosing, bankers that want to sell some assets, rehabbers that didn't finish deals. There's a lot of opportunities out there. You just have to get the cash to be able to jump on them. Investors, those with past profitable deals, can set up real estate funds. What's a real estate fund? Is a structure that allows you to have more than one asset, not just a syndication where you put one property. It's more than one asset. You actually literally have to, you can raise the money and buy, let's say, an apartment building, a storage facility, you can buy a home, and you can keep doing that to keep growing. So the whole idea is to have the right structure. So not when you get investors, each one want to negotiate with you, well, can you pay me 8% because I don't want to get 6? And no, you create a structure so people can come and join you. And then you're able to raise the money from small increments from different people, or even larger increments, but group the investors together under the approval and the watchful eyes of the Securities and Exchange Commission. SEC is the Securities and Exchange Commission. I'll explain how it works in a minute, but the securities in the United States are controlled by the Securities and Exchange Commission. When you take investors' money and you make the decision to deploy the capital, that's a security. So the opportunities give you right now less competition because not many people are set up like this. And what happens is somebody just clicked something for me to approve and I approved it. There are more profitable deals for resale or cash flow. So you decide if you want to get something and cash out and make more money, or you want to get something that you can improve its cash flow and benefit from that with your investors. So little on my websites here, you can see my own inventory. I have approximately 100 million of properties. You can see them, crepr.com. These are personally owned. This is my own inventory. I'm the largest owner of historic properties in the US territory of Puerto Rico. Also, I've been educating people. My website, CM REI is real estate investing. CM is Cherif Medawar. So Cherif Medawar, real estate investing. I'm not into just the education. The education's end goal is for you to invest. So it's the product of the product that you want. Like you're coming on this call, not just to be entertained or educated, it's really to set up your own fund, or if you're not gonna set up your own fund, at least to understand what's going on with the world of investing so you can invest wiser, maybe join somebody who's got a fund, etc., and maybe invest your money. In the beginning, people ask me, why don't you just present so people invest in your fund? Yes, I do have two funds actually, MIXIF, Medawar International Group Secured Income Fund.com, and the other one is securedfixedincomefund.com. Why do I have two funds? The way I set up the funds, again, a real estate fund, unlike a syndication, is when I set up, I can buy different assets. It's up and running. It's not like 90 days and we have to close on a property like a syndication. It is the best structure and the most powerful setup. I'm going to save you years of agony and give you the shortcut to success right here, right now. And you be the judge by the end of my presentation, okay? I mean, all I've done for the last 4 years is cracking codes. And my advantage was I started with a billionaire at Montbéliard. You can go on LinkedIn, put my name. You'll see my pictures with him when I was in my early 20s in front of one of his castles. I was his right-hand man. So I had this great opportunity in life to be identified by a billionaire that, hey, I could be his right-hand man because I was a hard worker, honest, etc. So take that to your advantage. So yes, I could present everything for people to invest with me, but I have been doing this with the fund. My funds have been up and running for 15 years, and I've decided to show others how they can actually do what I've done and help them set up and even team up people together so they can do deals together if they want to. So what do? We train people, we give them a turnkey structure, we train them in real estate, asset protection, and setting up their own real estate funds. That's what we do. How does it benefit you and others? The way it benefits you is you now can duplicate the fund structure. I mean, I can give it to you turnkey if you're interested in the education I'll present to you, because there'll be 4 sessions that we're going to do when I'm done with this presentation. I'll tell you if you want to enroll into 4 sessions, it'll be Tuesday, Thursday, and another Tuesday, Thursday. And you'll come in live, you'll ask questions, you'll learn, I'll dissect it for you. And in 2 weeks, you will become an expert in this business. You'll know exactly what I'm talking about. So the key thing here is it benefits you because you will know, like no one will explain to you. You can call an attorney and say, can you train me and walk me through what structure I should have? How do I find the assets? What would be the best way to do? Should I set up LLCs? Should I set it up in a C Corp? All the questions that I've had when I started, and it cost me thousands of dollars to pay attorneys at $650 an hour calling attorneys and having them tell me bits and pieces, and then I can't even think of the right questions. That was 20 years ago. I solved that, and I've been up and running successfully for many years and helped many people set up. So that's how it benefits you. You will know what's out there. What you should do about it, again, if you're interested in this, take the class. Don't go set up a fund yet. Hold your horses. Take the classes I'm gonna do on Tuesday, Wednesday. It's an hour and a half. Next week, Tuesday, and then Thursday, and then the following week, Tuesday. And then actually on Thursday, I open it for a lot of questions and answers, and answer everything up front with you, no hidden agenda here. So let's answer the five W's and 3 H's, right? What? We have real estate training. If people want to set up one syndication, like an equity syndication, they buy one asset, we can help you. But really we specialize in fund setups, and you will see by the end of this presentation that real estate funds are a lot better than just syndications. Why would you set up to raise money for one asset when you can set up once and be set up for 20, 30 years and then acquire many assets as you wish and be diversified and be able to raise money at any time, cash out people at any time? You will see. So who is this for? Investors who are involved in real estate. You can take the same concepts and set up something for business, but we specialize in real estate. We did the business setups for people in 2013, but this is a lot more exciting. Real estate is so much better. Where? Online. I do the training online, live Zoom calls, in person. You will see me. Ashlee will be on the calls. You'll ask questions we can answer on chat. Here, I'll answer your questions. She will read the chat and I'll answer it. So it's going to be very powerful. It's going to start next week. We're going to do 4 sessions, Tuesday, Thursday next week. And then the following Tuesday, Thursday, the week after. 7 p.m. Eastern Standard Time, which is 4 p.m. Pacific Standard Time. And you can work it out Atlantic Time or Mountain Time, etc. Why do I do this? I expand my network. It actually opens my network for deals. I see what others are doing. I want to know what they're doing. It helps me also grow. It helps me. I like to network. I like to teach. It's been the gift. I mean, it's my calling. I enjoy teaching others. The reward has been phenomenal, and it's amazing in life. You can't give unless you get back. It's just, I don't give to get, I give out of faith. It's been just unbelievable things. As a matter of fact, I'm working on a deal now that came from one of the students' investors. She's very successful and she was doing other deals here and there. And then all of a sudden, as we were setting her up, I said, listen, this is an interesting deal. She said, yeah, I'm raising this money. I said, listen, whatever the balance is, I'm coming in with you if you're interested. She said, great. What a great thing for me. She's already up and running. She found the deal. She got the investors. We helped her set up. Then I'm coming in with them and everybody benefits. So it does open my network. If you want to increase your luck factor in life, because you need three things in life. You need good judgment, okay, that comes with knowledge and practice. Number two, a massive amount of actions. You have to be very resilient to constantly search, constantly take action, to turn your talents into skills that are useful, marketable, and profitable. But the third thing you need is a degree of luck. So good judgment, good action, but if you don't have luck, you're not gonna go far. And how do you increase your luck factor? Through networking. I like to network. It's gonna be an opportunity for you to set up a real estate fund, to attract people and to network with them and build relationships to grow. So why I do it? I expand my network. I get to do joint ventures. You will get to do joint ventures with my students, fund managers, and other people that we've set up through the years. It makes my life a little easier. It makes them gain momentum faster. And they can network with each other. I mean, it's not like you need me, but you will have the structure to attract people. How do we do it? We break down the components of structuring a real estate fund. And if you have a real estate fund, you can really do joint ventures, which will be the best kind of alignment with what you have. Because if you have a real estate fund, you can partner with even a hard money lender. You can partner with a contractor. You can partner with another real estate fund, because sometimes you have the money, you don't have the deal. Sometimes you have the deal, you don't have the money. So you actually have a very big component of it, which is the fund. And I'll show you how to structure it right now to do that. How long is it going to take? I told you 4 sessions, and the last one, so the 3 intensive training with questions, but the last one is pure questions and answers, so you can make a decision if this is for you or you want to sleep on it for another 10 years, 5 years, 1 year, whatever you want. I don't know if I'll be here doing this for so long, because I spend a lot of time investing myself, but I do like the training, so I do everything on Zoom now. Now, some people say, well, I don't know if I'm going to do this. I prefer to talk to you one-on-one. Okay, I'm $500 an hour. I'll do the one-on-one. You'll have to schedule them with Ashley. I'll give you her email, etc. But I can tell you, once I'm done with this, the trainings allow you to ask me the questions directly as if we're doing one-on-one, and I'll do the full training for you, the 4 sessions, for $199. I mean, you can't beat the value, okay? You can't beat it, because even my time is worth $2,000 if it's just 1 hour each, and we spend an hour and a half to an hour 45 on each call. Okay, good. So hopefully you see the value. So we're going to talk about how to set up a real estate fund like a business, so you can make tons of money in a steady, reliable, and growing business model. And that's the whole idea. So let's start with what I call the DCBA. What's DCBA is the word definition first, because people get lost with the definition. I'm going to define 6 terms. That's all. 6 basic sections that I want to define. Then the C is the concept. I want to explain to you the concept of setting up funds, why, how, etc. The business models, what are the steps? It's like a recipe. And then what action you need to take to join us to train and then be successful as we set you up, because I'll guide you through all the way through setting up the fund and launching it, which could be done for you within the next 3 weeks. Literally, I mean, from the date we finish the training. But you have to attend the training. It's prerequisite, because I cover everything, so you know exactly, including a business plan and everything. And you'll see how we're going to go through it pretty fast. I'm very 80-20. Like, I'll give you the 20% of the 20% you need to know. The rest is fluff, and I don't go through that. Number 1, security. A security by the Securities and Exchange Commission, by definition, is when you raise capital from others. So they give you, somebody gives you 25,000, 50,000, 100,000, and you're going to put that money together, pool it together to make decisions on acquiring properties and rehabbing them and renting them, and say you're making all the decisions with the intention of returning profit. That's a security. So by law, you must set up a structure with a private placement memorandum that can get filed with the Securities and Exchange Commission. So we use attorneys. I have my own attorneys that we use for you, and we'll show you how it's done. But that allows you to actually be able to structure properly and be in compliance with the law. If you raise money from 3-4 people and go invest their money and something goes wrong, the first thing they're going to do is they're going to complain to an attorney. The attorney is going to say, was this person filed with the Securities and Exchange Commission? Do they have a fund? Do they have a syndication? Oh no, we just loaned their LLC, whatever. You're going to be in trouble. They can suspend you, they can fine you, they can jail you. It depends how bad the situation is. So you follow the rules, you'll do very well. Partnership is usually when two people come together to do a deal, usually one with money and one with experience. And then a year later, the one with money has experience, the one with experience has money, and they start fighting. So be very cautious how to structure that. Joint ventures is when two entities join hands. So there is a contractor with a company and you have your real estate fund. You can actually do a structure. Joint venture will be you buy the building 123 Main Street, LLC, and it can flow through to both of you. And then there'll be like John Doe, contractor, will do all this work. Susie Johnson, who owns this fund, will fund the purchase and the rehab and will get a loan for construction. And now you have clear definition of who does what. It's a great joint venture. I love joint ventures, can do really, really successful stuff. And those who want to join us and eventually do set up a real estate fund and all this, I'll give you even contracts that I've done that are airtight and extremely powerful. A syndication is when you say, I want to raise the money from a group of people for one asset. Usually those assets are multi-units, so they're hotels or apartment buildings or storage facilities. So you set up a syndication, you set up a fund, a syndication that says, we're going to raise money for 123 El Camino Real. This is a 60-unit apartment building. We're going to raise $2 million. We're buying it for $6 million. It's got beautiful view of the ocean, et cetera, et cetera. You're just having this beautiful thing, and we're going to divide it into condos. We're going to sell half of it. We're going to keep the other half free and clear, and we're going to do this and that. So you're going to describe one project, and you're going to raise the money for it. You have it under contract. You need to raise the money pretty quickly. You need to get a loan, et cetera. But syndication is a bit risky because it's only one asset. So that leads me to real estate funds. Real estate funds is when you say, I'm going to be setting up, I'm going to raise capital to buy some apartment buildings like this one, some residential homes like this one, this we're going to rehab, this we're going to actually improve and hold, and then this one we're going to sell, and then we're going to also do some mortgage notes. We can also do some tax liens, tax deeds. You can do different types of assets. You have 12 different commercial type of assets. You have many types of ways to transact in real estate, tax liens, tax deeds, mortgages. So all this can be set up as what I call an all-encompassing fund under the SEC rules. And unlike a syndication where you must sell the property within 5 years to cash out the investors because you're giving them cash flow and an upside from the profit when you sell, in a real estate fund, you can actually keep the money, keep adding assets, keep raising money, selling this asset and buying a new one. They're with you because they are actually getting paid. And usually we set up as a debt fund where we pay the investors a steady return, 6 and 8% semi-annually. And I'll tell you more about it. Those investors that come in like what I call the coupon clipping. They can even reinvest the money and get it to compound. I've done this for 15 years. We set up many investors with their own real estate funds have been very successful. So I'll show you how it's done. SEC exemption. So the Securities and Exchange Commission said, look, we're going to give you an exemption. Exemption from what? Exemption from registering. Because if you're going to go public, you must register with the Securities and Exchange Commission. But when you actually are private and you're going to raise money from private people, you can be exempt from registration, but you must file with them. That means we file what's called the Reg D. You see here Reg D. There are two types of Reg D, Regulation D, 506B, 506C. There are two. 506B is when you set up, you're going to say, I'm going to raise, let's say, $20 million. Reg D 506B allows you to raise money from friends and family. So you can actually go to people up to 35, write it down. Reg D 506B, please write this down so you can remember it. Reg D 506B, you can raise up to 35 individuals who are non-accredited. That means they don't have a net worth of $1 million, because an accredited person must be either a millionaire. A millionaire is a net worth of $1 million without calculating their net worth in their home. So it's excluding their primary residence. That's a millionaire. That's an accredited person. Or that accredited person is making $200,000 a year, or they are husband and wife, and they file taxes jointly and they make 300,000 gross revenue per year. So a dentist could be making 300,000, husband and wife, boom, they're accredited. They're not millionaires yet, but they make 300. So they're accredited. So long as they've made that money the last 2 years, then expected to make it this year. So they can actually come into your fund as accredited, but you also under Reg D 506B have up to 35 people you can take that are non-accredited. So your neighbor maybe has 150,000 saved and a nice house and all this. So they don't have a net worth of $1 million, but they would like to invest with you. You have a Reg D 506B, they can invest with you whatever amount they want to. Now, Reg D 506B, right, if you're writing down right, cannot publicly solicit. That means you cannot publicly advertise on social media or anywhere. It is called the Friends and Family Fund or syndication. Here is the better part, Reg D 506C. That's the most important part. That's the most important one. That's the one I suggest for people. And that's the one I have both. I have Reg D 506B and C. But the C was not available right away. It started in 2015, thanks to Obama, when he did the Jobs Act and the country was not doing well. And he said, you know what? The problem is we have these private funds with the Reg D 506B, and they can only take the money from friends and family, 35 non-accredited and all these accredited, but they cannot publicly solicit. If they're doing well, we need them to publicly solicit. So the SEC told Obama, okay, we can set up a different structure, Reg D 506C, and investors can set up and go publicly advertise on social media and to the world and on YouTube, etc., and get the money in whatever increments they want to be set up to do, but they have to take it only from accredited investors. And there are millions of accredited investors in the United States. So the beauty is, what I would suggest for you is a Reg D 506C. You can raise capital, and I set you up for $100 million fund. That means you can raise up to 100 million. You can leverage it. You can borrow against it 200 million, 300 million. But the key thing is we set you up to 100 million. We file it with the SEC under Reg D 506C. I even do a training with you for those who are ready to do stuff like that. That's the next level. And you can learn how to publicly solicit and how to do a video that you can present, how to do shorts that you can present, and it can change your life. You don't have to be a big presenter or anything. There are very specific ways to do it where the assets and your ability to explain basic things can attract the money. So the goal is to set up a Reg D 506C that allows you to raise the capital under SEC rules. It's a security. So we're going to actually set up a real estate fund so you can raise the money as a debt fund and pay the investors steady returns every 6 months from the assets you have acquired. Reg A plus is advanced. It's like going public, but you're still private. Forget it right now. It can allow you to raise a lot of money, but it is not what I suggest for somebody starting. And CF is crowdfund. It's too complicated. Crowdfund is when you crowd people that are non-accredited and get them in and stuff. Too much hassle. People want to invest a little money. It's like a lot of work for very little results. There is something called the condition of power. The condition of power in business or investing is little effort, maximum results. So the condition of power when you come to raising capital is to have a system to raise capital through videos and Q&A when you go to people on follow-up calls, number one. Number two, to do it through a Reg D 506C. So number three is the offering. To do an offering, to do a private placement memorandum, that means to tell the world, hey, this is what we're doing. You have to have a basic business plan. I'm going to go over the business plan on this call here. I'll cover it. I simplified it to the best level ever, and you be the judge. And the business plan will help us when we get together if you want to go to the next level and set up your fund, so we can draft the private placement memorandum. So you're going to say, let's say Michael is going to say, I'm going to raise money because I want to buy these single family homes. I want to rehab them. I want to sell them. And maybe Victor is going to say, I would like to buy apartment buildings and I would like to improve them because I'm going to take them, do this and that. And maybe Louis is going to say, I want to get these buildings that are under managed and not collecting enough money. I'm going to focus on Section 8 because in these areas, you know, there are areas 3-bedroom, 2-bathroom. Section 8 is paying $1,800 a month. How do you like a government check for a tenant in your apartment building at $1,800 a month. And I'm not talking like you have to go to, it's not going to be in California, I can assure you that, because that building is going to sell for a lot of money. But throughout the Midwest and in the southern part of the country, I've seen in Texas, smaller cities and stuff. So you can actually put a small business plan. This is what I want to do, and I'll show you how to do it. We're going to put it with you for the private placement memorandum. I got the calls through an attorney to set you up. In the private placement memorandum, there will be two important documents. One is called the QQ and the other is the SA. The QQ is the qualification questionnaire. So if you're talking to Susan and Susan says, oh my gosh, Richard, I'm very interested in investing with you. What's the minimum? What's the maximum? You're going to say, well, I have a private placement memorandum. I'd like to send it to you. And I'd like to give you the opportunity to fill out the qualification questionnaire. So the QQ is the qualification. She's going to say, Susie Johnson, I'm making $200,000 a year. I'm single, and I'd like to invest with you. So now the other thing she's going to fill out is a subscription agreement. I hereby subscribe to your fund. Let's say your fund minimum shares are 25,000. She's going to say, I'm buying, let's say, 5 shares. So 25,000 a share. That's 125,000. So you will be under the exemption rules because you'll be filed with the SEC, and now you have a private placement that has all the documents in it that are needed. Now, accredited, I explained to you those who are making 200,000 if they're single, 300 if they're a couple, or have a net worth of $1 million excluding their home. Non-accredited but sophisticated are those who you will put under the Reg D 506B if you want to set up one for friends and family. So they're non-accredited, but they're sophisticated. That means they understand what the business is, they understand real estate, and they've known you already. You have to have an established relationship with them for the B1. But we'll focus on the C, but I'll be happy to answer any questions on these. Now, profit splits, usually what does that mean? Oh, I'm sorry, equity offering versus debt offering. So equity offering is when you tell investors, we're gonna raise the money, we're gonna actually buy the property with a loan, and as the money comes in, I may give you 4% in the beginning. When the property performs better, I'll give you all the way up to 5%. But within 3 years, we'd have repositioned the property. It's going to make us money, and we're going to sell it in approximately 5 years. And from the gain upside, we're going to give you 70% of the upside. And we, the real estate fund manager, real estate syndicators, usually they're syndicators that set up equity, we're going to keep 30%. So the syndicator will set up an equity fund to attract investors, and they invest hassle-free. They don't have to make any decisions. And if you want to be like this, we can set you up with an equity offering. You can charge an acquisition fee, like when you buy a property, you can charge them. You can charge some of the management fee. You can charge on the upside maybe 30%. What I much prefer is a debt offering. Why? A debt offering, I'm telling the investors, I charge no fees. Now listen to me carefully. I've done this for 15 years, beat all my competition. I charge you no fees. I don't charge an acquisition fee. I don't charge a management fee. I don't charge a disposition fee. You give me the money on Monday, you start accruing interest on Tuesday. We constantly buy assets. This is an open-ended fund. That means you give us money, we deploy it, and that's how we work it. We pay you on February 28th and August 31st. We pay you. The minimum is 25,000 a share. How many shares would you like to buy? You just have to be accredited because we're a Reg D 506C. And when we do a presentation in a real estate investment location or CEO gathering or some seminar, etc., we attract enough people because we say no fees and we pay you steady returns, and all your money is cross-collateralized, if you will, against all these assets that we're acquiring. And we acquire constantly new assets, etc. And you get the boost to get started and the credibility with the filing, and you're able to do very well. And here is the beauty: you don't have to sell the assets at any time. You're not under the obligation like an equity offering to sell the assets. So if you get the money, buy an asset, improve the asset value, you can eventually refinance it, pay off the investors, cash them out, and you keep the asset for you and your kids forever. You can create a legacy for yourself. I've changed people's lives by showing them a small tweak, how they were raising money, overpaying and working for the investors. Well, you're better off with a job then. Or set up as a debt offering, a real estate fund, and keep up and running for as many years as you like, and create something that is the best structure in the country. There are quite a few people that set up that stuff, but they they don't talk about it because they don't want competition. I have done plenty, and we can help you with that. All right, so profit splits is when you set up an equity fund, you're gonna actually tell the people, okay, I'll pay you from the cash flow profits, I'll pay you so much, from the upside, I'll pay you so much. And there is preferred return. That means the first people that will come in, I will get the first so much of the payout and all this. You can complicate the offering so much. I like this simplicity of a debt offering. We'll pay you this. It's a flat return. Anytime you want your money, you don't have to wait 5 or 6 years. You send us an email, we cash you out in full within the 12 months period once you send us the request to cash out. How are we able to do that? Because we have assets. I'll show you exactly how you do that. You get assets that perform. You can refinance. You can sell an asset. You can also get a new investor to come in, take that money, pay the other investors coming out. Wait a minute, Cherif, isn't that a Ponzi scheme? No, that's for equity funds. Equity syndications, if they take money and turn money out without having asset, that's a Ponzi. But in a debt offering, it's like refinancing. You have a loan with Chase Bank, you're refinancing with Wells Fargo. It's perfectly fine, and the SEC helps you grow. So conclusion on this, we're gonna set you up with a real estate fund. Reg D 506C is the best. You'll have a private placement memorandum based on how you wanna invest with the business plan we discussed, if you wanna continue doing that. The private placement will have the 2 forms that investors wanna sign with you. You will take accredited investors, you will do a debt offering, and you will be able to not share the profits, you just pay a steady return for the investors. All the upside profits are yours, and you can sell, refinance, and do anything, anytime. You don't even have to report financials under the Reg Ds of the United States Security and Exchange Commission. This is since 1933. It's extremely powerful. You do it with full integrity, and you will be very successful. The idea here, the concept is, I'm talking to people, you're on this call, I am assuming you have a strategy of some sort. That strategy makes you money. It's useful, it's marketable, profitable, and you can repeat it with some predictable result eventually. But you need a structure. So the structure is a standardized way for others to invest with you. How do you have a standardized way? You want to tell them, here's my private placement memorandum, you want to invest with me, here is how we pay you. You invest a minimum of $25,000. We, we pay you February 28th and August 31st, and you just explain to investors through the private placement. Once you have the strategy and the structure, you follow the system. How do you actually do it to produce the predictable results? Where do you find a property? What do you do with a property? And then you repeat, able to scale. And then once you have the strategy, the structure, and the system, you got to automate it. You don't scale yet. A lot of people scale right. Oh, I got a system, I'm going to scale it. No. Before you scale anything, before you get bigger, you must be able to step back and have a team with the right tools, the right systems of technology to be able to step back to produce the results without you being there every day. And that's when you have achieved the level where you can scale to the critical mass of the market share, the volume of deals that you can handle, and the price points. And that is based on your own capacity. I've seen people can do, it's just unbelievable what I've seen some people do. I've seen people leave my trainings and have the right setup, and they go out there, first deal is $900,000. Actually, I think I have one of the success stories here. I may be able to play it. Last time I wasn't able to play it, talking to people, I couldn't play it. But I'll try to play it for you. This guy just had the structure, found the right deal, did the deal, got exactly followed the actual strategy, the structure, the system, automated everything, stepped back, and scaled it to the level he wants. Now he is amazing. He just scaled to a level that's crazy. But he's buying Lamborghinis and he went to another level totally. Cool. So the real estate funds in 4 sessions. The first couple sessions, I'll be talking to you about the definitions and the actual concept on how to structure in details the fund and the business plan to paying the investors. The business model of successful real estate funds, how do they structure? How do they deal with the transactions to make the most profits? And how do they distribute the cash flows? And then I will finish by telling you how to follow the SEC rules and how to raise the money. There are systems to do it, do the acquisition and repositioning to grow and contribute to sustain the profits and pass on a very good business model to your loved ones. So who is this for? Those who are involved already in real estate and want to do more deals. So you have some way to make money, great. Then this is for you. You have a strategy and need the structure, perfect. You own some real estate that need to be developed. Oh, Cherif, I have this land, I don't have the money to develop it, I've been waiting. Okay, this is your time. This is the way to do it. You got some good deals, but you don't have enough money. This is the time, because I'm telling you, the next couple of years here, there will be more and more of these problems with commercial loans coming due like never before. Great opportunities for those who can put the money together. You have people who want to invest with you. A lot of people tell me, I've been doing this, I'm sharing it with people. They come and tell me they want to invest with me. So when I tell them I'm ready for you to invest with me, each one is negotiating with me this and that. I don't know how to write all these agreements and partnerships. Wait a minute, you need to have a standardized way. And if you're going to invest other people's money, that falls under the securities rules. Follow the rules, you will grow very well in the long term. So if you're interested in development, it's a great way to do the development. You can even partner with contractors on these. You want to do larger, more profitable deals where you have less people competing with you? I'm going to tell you the critical mass in the United States. Critical mass of prices is between slightly over 5 million to slightly less than 30 million. Because from, like, most people are dealing around the 1 to 5 to maybe 10 million. And then the big funds want 35 to maybe higher in the millions. They want apartment buildings that are 50 to 100 million. For them, they can be dealing with $5 million purchase. So you get 5, 6 million to 30 million acquisition. You got to raise 20%, 25%. You can make a killing, and you can get small deals. I like actually small apartment buildings are very, very easy to resell, because a lot of people in 4plexes and 8plexes want to roll their money forward. So if you want to do larger deals that are way more profitable, this is the structure for you. And you're under no obligation to set up and roll the money right away. You can actually talk to people and tell them, I'm ready to invest. Are you interested in all it? Once you have the deal, you can start getting the money and get it going. Number 8, you can see the potential in the current market. This is for you. If you can follow SEC rules and regulations, and you like compliance, and you like to follow what makes you sleep at night and what makes the investors comfortable with you to invest with you, this is for you. And if you're willing and able to grow in 90 days, okay? Because the focus, I believe in life, once you get something started and you repeat for 90 days, what ends up happening, it becomes the new you. When you start presenting yourself to the world out there, I am a real estate fund manager. It's a whole different way for them to perceive you to be able to grow. So the question is, what makes people not having a fund? A lot of people create their own obstacles in their mind. There is always what I call intention and counter intention. So what's the counter intention here? People ask themselves, well, Cherif, am I big enough? Yes, you can start small. The whole idea is to be starting small to grow with the investors. Cherif, this seems too complicated. My job here, and in the next 4 sessions, for those who will enroll in the 4 sessions, is to show you how uncomplicated it is. It's like anything else. New, you're confused. You're not so sure you want to do it. Once you understand it and you step in, you're doing it, you start growing with it. Not sure how to structure it. I will show you what is the best structure, or what's the shortcut to success with it. I don't want to make mistakes with the SEC. That's why we have a private placement memorandum and certain steps for you to follow. How should I present to investors? You present to investors one-on-one. There is a way to do it, like over lunch, over a meeting, and you present to investors in groups when you have gatherings, when you invite them. And I'll show you even a shortcut with all this. Once for those who actually want to set up a fund, I show you how I set up a video, and the video covers the business plan, what I call the 5 Ps, okay? And you're able to present very well in a 10 to 11 minute video. And when people are interested, I said, hey, let me send you this video. And it's a private link on YouTube. You can post things that are what's called unlisted. So you're able to have one work done, duplicate yourself over and over, and then follow up with calls. So how to present to investors is the fun part. How do I manage the money and report it? Well, very simple. You report twice a year, and managing the money is how you're going to get these assets, and all you need is one bookkeeper. People say, well, how many people do I need? It is not that complicated. Most people, like my project managers, property managers, all get paid from the property. I'm not going to go get the money from somewhere else. I acquire assets that can actually get me to grow, and that's how we do it. When people say not sure how to get started, this is the way to get started: setting up the fund and then starting step by step to grow. Attorneys want a lot of money. Well, yes, I've seen people set up for $70,000. I had a group that do shopping malls. They were pretty big, and they were so big when they went to the attorney said, well, we need to set you up in so many different ways, and we'll do equity structure and this and that. $70,000 they paid. I have their own success stories when we finish with them. After a year, they couldn't raise one penny because their private placement was 42 pages. So when they do a presentation, people will get excited. And just to explain to people what to fill out in paperwork, they couldn't get anything. They came to me because one of the people in the group was a student of mine from 7 years ago. They came, they said, we understand you have a simpler structure. We like the debt idea. We don't want to give anything of the upside. We've been working for investors. Restructured everything for them, simplified the structure as a debt structure. First pitch, 2 weeks later, $5 million was raised. And I will get another success story from them. Now I'm on the board of directors, and actually we have the first board of directors meeting on March 3rd. It's very exciting. So people say, I don't want to overwhelm myself. I'm going to assure you that this structure is how you consolidate everything, because this is how you should be buying properties. Under an LLC, we're going to set up a limited liability company that's going to be your fund. So let's say it's going to be called ABC Capital. And now that structure is an LLC, let's say filed in, Orlando, Florida. And now you're able to transact. You have a bank account for the fund. People fill out the qualification questionnaire, subscription agreement. You approve them. They send the money. You're able to deploy it. That's how it's done. You're not going to overwhelm yourself at all. As a matter of fact, it's going to clarify things for you. People said, I'm not sure I can afford staff. I already covered that one. When you are set up with assets and properties, I have a full team, but I have a full portfolio. So who's paying my in-house attorney? Who's paying my CPA who used to audit banks? These guys are very high-powered people, but they love having a steady job. They love having their W-2. They love learning. They love the bonuses, etc. And it makes my life easy. I'm sitting here today in Los Angeles. A few days ago, I was in Puerto Rico. I'm going to be traveling to Cancun. I can be far away, but I can manage through the people because the assets do the performance, through the performance are able to pay the investors and the team. There are two types of fund managers: those who are successful and those who are unsuccessful. The successful ones understand what they're doing, and once you have comprehension, you're able to grow. The unsuccessful ones are confused. They just don't know which asset to start with, how to raise the money, what to do with the paperwork. They go to attorneys, they come back, they give up, they end up spending $50,000 to somebody who is there telling them, I have a template and I have whatever. No, I'll show you how to do it and be successful, because you need to have the knowledge, what type of fund to structure and what's the best structure. Take action, how to find the deals and how to structure the deal actually profitably. Okay, we have a deal, for example, it's 26 units. So the way we're doing it is they said, well, we're going to give you this deal because it needs rehab. It's an unbelievable deal. So I came over, I said, you know what, I'm willing to pay you the full price. I'm not going to negotiate with you more, but I would like to put an option and you give me some time to close. And also, while we have it under option, I'll go in and fix all these units. And the guy said, well, but how about my liability? No. We're going to pay for the extra insurance for liability, and the option money is non-refundable. And if I don't exercise the option within 4 months, because we're going to be done in 90 days, if I don't exercise the option within 4 months, you can keep all the money that I gave you, the option money and all the rehab work. The guy is like, where do I sign? But what did I save myself? I saved myself putting all cash to buy it, because he wanted an all cash deal, and then pay the rehab. So now I'm going to rehab it, and we already have a bank that told us the other day, hey, listen, once you're done, we're willing to give you so much. Well, guess what? That so much, based on the formula of what the income we expect to get, is going to cash us out completely. Talk about having 100% loan after the rehab and all. But how do I do it? I have the investor's money. We sold another asset. Actually, on the March 12th, we have a closing. So it'll be more money coming in for the rehab, and everything's going to be done because the fund structure. But I know how to take action. I show people how to take action. So you have the knowledge, you have the action. If you don't have knowledge, you better afford somebody who has the knowledge. You see, I don't know how to fix properties, so I hire contractors. Networking is the third thing. The fund allows you to network because you find investors and you grow the relationships with them. And once they get paid, they start wanting to compound their money. They start thinking they have credit lines here. They start telling you, I have IRA money there. 3 steps to success: knowledge, action, network. They're so aligned with the 3 things you need in life: good judgment, which comes from knowledge; great skills, which comes from a lot of action; and great luck, which comes from the networking of who you know. All right. So what are the benefits for you? Let me stop here for a second. I'll go to this one. Ashlee, do we have any questions that maybe came in through the...
Yes, we do have some questions. First question is, define debt fund versus equity fund.
Okay, thank you. So a debt fund is the investors come in, give you the money, and they're like creditors. They're like lenders. They just want a steady return. So the way I do it, you can write it down, from 25,000 to 250,000. So 25,000 is 1 unit. So if they buy 10 units, they have 250,000 in the fund. It's a debt fund, so they get a steady return. So from 25,000 to 250, they get 6% per year. We pay them 3% on February 28th, 3% on August 31st. Now, they put 250,000 and more, anything over 250,000, they get 8% per year. 4% on February 28th, 4% on August 31st. And we charge them no fees. And in that fund, we charge no fees. We're not going to charge you an acquisition fee when you buy a property. We're not going to charge you a management fee. We're not going to charge you a disposition fee when we sell it. And we are not going to buy just one asset. We're going to buy many assets, many different properties, so we can reduce your risk. There's always risk, but we reduce your risk. It's like buying a mutual fund instead of one stock. You bought NVIDIA, it barely went up like 0.5%. I don't know. This guy was telling me about these stocks and he said, I put my money in mutual fund now. I don't have to worry about it. And ironically, S&P 500 just took a big dive the other day. So he called me, he said, I don't know what to do. I said, get into real estate. What are you doing with stocks? Anyway, I think it's going to come to him. He's got crypto as well. Anyway, he's still sitting on it. Crypto can go to $1 million, still sitting on it. There's no cash flow. Real estate is where the cash flow is. Cash flow is the oxygen of the financial world. Okay, I went off on a tangent. So debt funds are fun to present, simple to attract people, because here's the steady cash flow you're going to get. I charge you no fees. Now, how do you make money? All the upside is yours. How else do you make money? When you sell an asset, you can take the money, deploy it in something else. The investors invest in your fund, and your fund has different assets. And once they get paid the steady return, the rest is all yours. You can't even fathom the difference of how it takes you to another level, and how many people are attracted to this, especially with baby boomers that say, too many moving parts with this apartment building, they're going to do this. They just want to invest in something they understand with steady returns. Okay, that's debt funds. Equity funds is when usually there are syndications. We're going to buy this apartment building. We need you to come in with us. And this is an equity position. We need to raise 30% to acquire the building with a 70% loan. Then we need to raise another 10% to do the rehab we need. But we're going to pay you from the cash flow. At the beginning, we're not going to be able to pay cash flow for so many months, or we're going to pay you little cash flow, then we're going to pay you more. But then within a year, 2 years, when it starts performing, we're going to refinance. By law, if it's an equity fund, when you refinance, you have to pay back and reduce the investor's money. You can't take it like in a debt fund. And then within 5 years, you must sell it, because the investors are taking little money, maybe 4% and whatever, like Grant Cardone or stuff. But eventually you must sell it. And when you sell it, the upside gain, you usually distribute about 70% to the investors to make that annual rate of return in the double digits, hopefully maybe 8, 9, 10, 12%, depending on how profitable it was. Well, sadly, it hasn't been so profitable on these equity funds, syndications or equity structures, because the interest rate moved up. And people, in some projects, people couldn't pay the rent. So they had to kick people out, couldn't get people at higher rent because the market was changing and people were losing jobs, etc., etc. So one structure, the debt fund, attracts people based on the steady return and no fees, and anytime they want to cash out is 12 months. The other one attracts people because they want an upside later, but then they're stuck for 5 years, and then they have no power anyway to make any decision or cash out for those 5 years. So big difference. Did I answer your question?
Yes, thank you very much. The next question is coming in from Cody. He said that he hasn't set up a structure yet. His biggest worry is setting it up without steady deal flow. He said, right now, I have 2 buildings under contract and can't find the tenants yet. If I was using raised capital, I would have to pay the investors even if the deals fell through. How would you mitigate this, Cherif?
Oh, what a great question. I'm going to tell you something. Often people ask me, what comes first? The deal comes first or the money comes first? Like, which one attracts the other? Guess what? A lot of people think if I have a great deal, it's going to attract others. If you have a great deal, don't have the money, whoever you attract is trying to steal the deal from you. Just like basic capitalism. It's a dog eat dog world and you must be a wolf. This is capitalism. Okay, so take it to your advantage. The way you do it is you have the money, and you will be amazed what happens. When you have money and you call on people that are in the market and you say, what projects do you have because I have money? That entire conversation changes. I was talking to this Irish guy that work as an Irish group as contractors in San Francisco. And last year I was having a conversation. He called me up for something to ask me about some work we're doing next door. And I said, by the way, I'm selling next door and I have a lot of money. I don't have any deals. What do you have? Oh, he changes completely. The friendliness, the accent, the beauty. He wants to buy me lunch, dinner, whatever. Why? Because he's got this other project. He said, it's pennies below market. I am going to share 50-50 with you. I'll do all the work. Why? Because it's an incremental deal. He wasn't going to do it. So to answer your question, once you have the structure, you need to understand that you need to communicate not just with investors to raise money, but with other people that have funds. And we have a network of people that we set up through the years and other people in your market. And you keep the word out there. I'm looking for deals. I'm talking to people that have deals. You go to the bank and you say, do you have the non-performing asset department? As you see, I have a real estate fund. I just opened the bank account. We're going to be actually doing this and that. And the bank says, okay, we can sell you this asset and give you a loan for so much. Now you have the fund and you're raising money, you're able to deploy it right away. So it's a balance between the fund, cash that you raise, and the opportunities. And yes, sometimes you'll have more cash than deals. Sometimes you'll have more deals than cash. That's why your network will make a difference, because the reverse will happen with somebody else. They will have more cash when you have the deals, and then you can do these together. That's why I harp on joint ventures. Cool. What else?
Thank you. Matt is asking, can you use the debt fund structure to purchase operating and profitable companies?
Yes, we have set up for a couple people that we say the main activity is going to be real estate fund, but we also have the opportunity, if we have the opportunity to acquire businesses such as, and then we try to make the businesses related to real estate. I'll give you a couple deals. Actually, I'll give you 3 examples. One, this lady had a couple lots that she owned for many years and she wanted to develop them. So when we were drafting her PPM, she said, you know, this guy, the tractor, just to rent the tractor is going to cost me so much because I need it for so many months to do both lots. And she said, I could buy one for less than that. I said, wait a minute. Let's just add into your real estate fund that not only you're going to develop the lands that you already own and you're going to acquire that third lot that's in between the 2 lands, but you will also purchase equipment and do this and this as part of the endeavor into the real estate fund. We disclose it. The other one actually has an opportunity it was a big lot and he's raising money in the United States for a deal outside the United States. And they had a huge land. I don't want to say the country because his deal is cooking right now. And they actually approved it for a runway for airplanes, for actually an expansion of the airport close by. So suddenly now he has a whole business of developing the land for the airline people that want to come in. And so the airline CEO that want to take that land for their own lending and stuff for private jets wants to actually go in with them. So we added a whole component to the business that relates to the land that he's going to do. So yes, you can do businesses. The third one was a mortgage company. The person said, we're going to acquire this, and we're going to also run a mortgage company for private lending, which is hard money lending. Actually, his private lending went so well that he wanted to set up a separate fund, which usually one fund is enough, but he just wanted to set up a separate one because it was growing like crazy. So yes, we can do it.
Very good.
Long answers for short questions. What else?
No problem. Lou is in residential. He's actually buying mortgages and converting mortgages to first lien positions and open-ended loans. And he was wondering, have you set up any funds for notes and mortgages, and how has that been?
Yes, I love them. If you know anything about me, I am very big on mortgages. I don't do lending personally, but I buy mortgages, etc. And I've done very extensively in 2009 and 10. You can even Google some of the success stories on YouTube. You will see older stories, 2009, 10, 11. We did 1,430 some purchases of residential homes in bulk, fixed them, sold them, and carried the financing. So I love loans that I create. I love mortgages that I can buy at a discount, and we can set you up like this. Very, very powerful, and we have experience in it in so many ways, including how to do hard money with the structure itself.
Very good. Aiken is asking, can investors that you bring in be international?
Yes, absolutely. As a matter of fact, I'm very big on this. We have even a structure, and we actually have a CPA from New York. It sounds expensive, but he's not expensive at all. Actually, he's amazing. He's fascinated by what we have going on. And why do we have a CPA from New York? Because what I tell you is, let's say you have somebody from Canada. Let's forget Canada. It may become a state in the United States. I'm just kidding. And let's just have an investor from Canada or an investor from Russia or from France, and they want to come in. We can set them up with an LLC in the US. It gets its own tax ID, and then they can loan the money from France all the way to their own LLC with a virtual bank account, like a Wells Fargo online, whatever. And then that entity, they fill out the paperwork for that entity to invest with you. So when you're paying from your fund, you're paying the LLC in the US. And then them from France or Russia or wherever, they can then either borrow the money from themselves, or they can actually file the taxes and get their money, or keep it when they fly in. They can use deductions for flying in to look at investments, etc. I will show you how we can do it, and the CPA in New York sets them up, and it's just very simple, turnkey really for them. And why do we do that this way? Because if an investor sends you money directly from offshore, outside the United States, somebody from Brazil sends you the money. If you send them the return, the interest return, like on a debt fund, and let's say they invested $1 million, you're going to send them 80,000 a year. So 40,000 and 40,000 every 6 months. What the IRS said, you must withhold at the source. The source is the United States. You must withhold at the source 30%. So we can make sure that whoever is a foreign person investing here files taxes. Okay. So you avoid that by showing them how to set up in the US, and they have full access to the money online with an ATH card or an ATM card, etc. So I'll show you how to do that. We love foreign money, and the United States loves money coming in. They don't like money coming out, but they love money coming in.
Love it. Mm-hmm. All right. Next question is coming from Fatima. Mm-hmm. How did these structures fare during the fall of the housing market?
So it depends how you were structured. If you were doing a development, so it depends what stage you're in the development, and if the bank continued with you, because some people are halfway in a development and then there is a problem, and the bank says, I'm not going to give you stage 3 and 4 for the construction. So now that person goes bankrupt because he's never heard of setting up his own real estate fund or her own real estate syndication even, which is the perfect time to group investors' money and do it. As a matter of fact, you will see MIXIF. If you go on sec.gov and look at my fund, the Metawar International Group Secured Income Fund, MIXIF, you're going to see I'm set up for 100 million we raised through the years. And you will see that I set up in 2009. Does anybody here remember 2009? 2008, 2009, 2010 was a disaster in the United States. It was the best time to set up. I had enough money to invest on my own. I didn't even have money, time to go and invest other people's money. I said, I don't need your money. But I was doing a presentation in 2009. I'm showing people, look, we're doing this, and it was at the San Mateo Marriott. And one of the students raised his hands and he said, I see a lot of deals because the market is so bad, but I don't have enough money. And if I make a mistake, I'll get a divorce. I was like, oh my God. I said, well, what are you asking me? What's your question? He said, can I just give you my money and you invest it? So jokingly, I have 100 people at the Marriott in San Mateo next to San Francisco airport. So jokingly, I asked the audience, how many people would just rather give me the money? And then everybody raised their hand. And I said, oh my God, I thought I was so smart trying to train them. These people prefer to give me the money. So we went and set up the first fund in 2009. And to answer your question, you set up a real estate fund because you anticipate a decline in the market, not just in case, what should I do? Why? What do I mean by this? Because when you set up a real estate fund, that's a debt fund, I will show you how you will be diversified in 3 ways. Number 1, by type of assets. So you're going to have a multifamily, you're going to have some mortgages, you can have some residential, you can have storage facility, etc. So you're diversified by type of asset. You're diversified by location. You may be in North Dallas, South Dallas, downtown. You may be in Houston. Number 3, you're diversified by style of investing. You may be buying to rehab, refinance, and hold. You may be buying to improve and cash out. So there's a cash flow and cash out. So these 3 types of diversifications give you the backup plans. So that's how you set up in anticipation of a market decline. And that's how I've survived many different cycles in the market and have the success stories and help people set up. Cool. Can we continue or we have other questions?
Just a few more questions. Joey said, can you set up an equity fund for a startup company?
Yes, you could. We've set up actually even, believe it or not, one person for real estate and a percentage in crypto and Bitcoin. So we've done it all. So yes, a startup, it can be very well done. We've even, at one point, I set up a company in Silicon Valley to, I kind of help them to raise the capital and all this. So yes, we can certainly help you with that.
2 more questions. Cody just had a follow-up. He said that he knows that you set up so when someone invests with you, they start earning returns 24 hours after. But do you suggest maybe having reserves in the beginning to pay investors, even if no deals have closed yet?
Okay, so I deal with these type of nuances one-on-one when you set up. Once you listen to the 4 sessions, and later you're ready to set up, that's when we do the structure together. For instance, so very specifically, one of the person that we were setting up, one of the people we were setting up, and he set up his own lending company that I told you grew like crazy. So he said, Cherif, it takes me 2 to 3 weeks to do all the paperwork to do the new loan. We can't move that fast because we're new. So I said, wait a minute. When we finalize the fund here for you, we're going to say that when people deposit the money, 30 days later, they start accruing the interest. So he's so relaxed now. He's so happy because now he rushes. He's getting better. He's going to do it probably in a couple of weeks in terms of raising the money, deploying the capital as a loan out there to lend the security against real estate. But he has 30 days with no interest paid. And people love it because their money is not only controlled by a fund that's filed with the SEC, but it's against real estate going out there. So yes, we can work on some nuances, and based on what you're trying to accomplish, I'll suggest specific reserves.
Very good. And one more question before we get back into it. Omar said he has a building generating $73,000 a month with a children's hospital as a tenant. He's looking to raise $3 million and he will be willing to give a return of investment of 5% over 10 years with a quarterly payout. What structure, Cherif, do you suggest that he use for this type of deal?
Most definitely a debt fund. Why? Because you don't have to pay quarterly, you can pay semi-annually, number 1. If you want to do quarterly, we can do it. Number two, all the upside will be yours. And number three, you may surprise yourself because it's a good business model showing cash flow. You may surprise yourself and end up raising a lot more than you expected. Well, what are you going to do if you're in a syndication equity fund? You have to give them of the upside. Once you raise the money, that's it. You can't raise anymore. You have to go and pay another 30, 35,000 to another attorney to set up another syndication. I set you up once. You're set up for life. For life. That means you don't even have to cash out the investors on a certain date. The SEC says for a debt fund, you can cash them out when you decide to cash them out, or they can cash out when they request. I'll show you how powerful this is. But the key thing for you is you already have the asset cash flowing. Very easy to buy, to set up the fund so you can get that cash flow of that asset into the fund and raise enough money as a business model to do it again and again and again. And all the upside will be yours. Even if you don't make much now, you're not going to be worried about 10 years. The funds are set up however long you want. I set up my fund in 2009. At that time, the SEC said, give us a date by which you're going to cash out. I said 2033. But now they changed. They said, you know what? You can stay open because it's that fund. All right. Good stuff. I like the cash flow at 73,000. Wonderful. Children's Hospital. There's nothing like medical field with that stuff. Good.
That's it. That's it for now. I'll let you know if we have any new questions coming in.
We'll stop in a little bit again. So what are the benefits for you? You can make bigger profits with leveraged resources. What do I mean by leveraged? Investors' money, banks' money, credit lines. Acquire larger properties which have less competition. Pool the investors with little means together. I was setting up this broker and she said to me in the beginning, she said, Cherif, I keep meeting these people. They call me, they say, well, I got 100,000. Do you think I can do a down payment to get an investment property? I got 150. I said, are you kidding me? You need to set up a fund. She said, tell me more. So I realized I had to present to people one by one. I said, no. I'm going to get the interested people. I say, come on a call. I'll do 4 sessions to understand it and do it. She has been able to group these investors together and be able to actually grow and make it happen. Now, in her case, we set up a Reg D 506B because she had to take about 35 non-accredited. So her contacts were not millionaires. They were not making a lot of money. So she set it up, built a relationship with them to be able to take their money. And then she launched her own fund, which she had raised about $2 million from small increments and got her an apartment building where she has now a huge upside for herself. So borrow easier from various lenders. When you tell a lender, I need to borrow here, and they say, we need you to put 25% for your LLC, and it's a fund, just raise a couple hundred thousand more. You got the 25%. You raise a little bit more money. You talk to investors and you make it happen. And once you get the first asset and you sell it, you can actually roll the money in the next one because the LLC is the owner. Your fund is the owner. When you sell one and roll the money, guess what? You can do it until an exchange with the LLC itself. So it's extremely powerful for you to just get started, and then it compounds on itself and you can grow very quickly. So you get the cash flow and do the big paydays, and then you can also structure creative deals because you can tell people, I'm going to give you the option money. I'm going to use the money to do this and that. And you gain more control over your market once you do the deals and focus. Like I like to focus on areas. In San Francisco, we focus on Pacific Heights, the area that's good. In Old San Juan, Puerto Rico, we focus on Old San Juan where the cruise ships arrive. So get all the upside with the debt fund. That's an extremely beneficial way to do business. How does a real estate fund structure benefit you? Clear structure for the investors, so you don't have to worry too much about what to pay everybody. Everybody knows this is a clear structure. It's filed with the Securities and Exchange Commission. There is legitimacy with that filing. You have clear payouts to the investors who pay you 6 and 8%. You put 100,000, you're less than 250, so you're 6%, 3,000 every 6 months. Oh, that's for your kids? Wonderful. They will get the letter that we send out. They'll get the statement. We'll show you exactly how it's done. A bookkeeper is all you need to do the paperwork. Clear assets to be purchased is going to be very specific. This is the property you bought. This is what we're buying. This is why we're growing. We're raising money for these assets. It's better than a syndication because it's not one asset. You're telling them you're diversified. We manage the risk a little bit better. and it's easier and better than bank loans. Actually, many people that set up the funds with us are actually doing all cash deals right now. I have this lady, she is, her religion is Islamic religion. So she said to me, I cannot pay interest. I don't do interest. I can't deal with interest against my religion. So I can't set up a fund. I said, you can certainly set up a fund because you have properties that cash flow. So she set up the fund, and the fund is set up. We will pay you from the cash flow of the properties. So she attracted people that are Islamic people that want to deal with interest, and she attracted other people that say, I don't want to deal with interest, and you're paying interest and it can cause us problems. So it's a beautiful, beautiful way to do it. Easier and better than bank loans. Of course, you can leverage with good bank loans. Banks are always good because interest rates are supposed to come down. It will come down. I think the interest rate will hover between 6 to 7% for years to come. But I'm no Nostradamus here. I work with the market at hand. I look for the cash flow and the upsides. Full disclosure, a fund, when you structure a fund, this is not buyers beware, it's full disclosure. Whatever you know, you will disclose. And when you're buying many assets, you say, this is what we're doing, this is how we're doing it. They don't care if it took you longer to fix a property. They don't care if you sold it or recapped it. All they care for is, did their check come as promised? And yes, the checks will come when you buy properties at cash flow, when you do hard money loans at 12% and 2 points and you're paying the investors 8. Cherif, what if an investor tells me, I'd love to invest with you, but somebody else is offering me 12? You tell them, hey, listen, you can invest with them. I'm not asking you to give all the money here for my deals. I'm more conservative. You can put 50% with them. They're a little bit more aggressive, and 50% with us. I never lost an investor when I was upfront with them and told them. Because somebody to pay 12 and 15, what are they talking about? They're talking about IRR, internal rate of return. Let them define what IRR is. Google it. It even tells you by Googling it, say the definition is hard to define because it's based on individual tax brackets and what, etc., etc. So we tell them full disclosure, and you have the power to do joint ventures on many levels with contractors, with other partners, with owners of properties. I had just recently one of the real estate funds that set up. He went to the seller of the building and told the guy, I said, would you like, I said to the guy, would you like to sell the building but stay co-owner with me? He said, come again? If I'm selling it, how can I stay as an owner? He said, sir, the fund, I have a fund, we can just own the property and you become a partner in the deal. And I'll write an agreement with you with my fund. You continue to manage it, but you will cash out, do a 1031 exchange, but you will actually just continue managing it with me. He was able to acquire a deal he couldn't afford, was able to raise the money on a property that he didn't even have to manage, and the other guy sold it and became partner with him. You're only limited by your creativity, your training, and the ability to communicate, and I'll help you to get there because of the structure you have. So what special qualifications do you need to have to set up a real estate fund? You don't need to be real estate licensed individual. It does not require a license. You don't need to be wealthy. You don't have to say my net worth is X. You don't even need, listen to this, you don't even need to be accredited yourself. But if you set up the Reg D 506C, you take only from accredited people. You don't need to be experienced in all areas because you're going to have the people that help you. I can't even hang a picture on the wall, but I have great contractors that have worked for me for years, great project managers where we can have a text. Can we do this or that? And I can answer the text immediately and I know exactly what's going on and how it's happening. All right. So also, no need to already own a property. Some people say, but I don't own anything right now. I just have my home and I just flipped all these other properties. I don't have specific assets now. It's okay. What if you do own a property? I can show you. I have this guy, he has like a little strip mall. He set up the fund to go acquire some other retail tenants and strip malls. You don't even have to transfer that mall into your fund. You can create a management agreement. I show you how. I give you a sample of the management agreement. You can create between your fund and your asset. So you can get some of the cash flow here if you want. Very, very powerful. No need to start with a lot of credit. You just have to be able to get the knowledge for the SEC rules, which I train you on, take the action to get the right deals, and network with investors, seller, brokers to make things happen. So what's in it for the investors? What do they want? The investors benefit from group investing in acquiring larger, better, more profitable deals. I remember I used to ask the audience, How many people would love to own a McDonald's building? Everybody raise their hands. Yeah, it's corporate guarantee. They pay triple net. That means they pay the payment net of tax, insurance, maintenance. McDonald's owns some of their buildings, but they lease a lot. And I say, okay, well, how many people have $1.5 million for down payment because they go for like 3 million, etc. Depends on the size. And a lot of people don't have $1.5 million. I said, but how many people here would have like 100, 150,000? For my 401k, I can borrow 50. I have IRA. Okay. What if I group the investors together? Would you be interested in one of those deals? What if we get the building under contract vacant for 700, 800,000? And then call on McDonald's or Jack in the Box or Burger King and put them in? You know, the building doubles in value because when you have a corporate guarantee for 15 years lease, that's how we'll do the deals. And I'm known for these type of deals. They're called joint venture for single tenants. You could see, actually I have videos on it, etc. But my point is, when we set them up, the individuals with the 50K, 100K, 200K, they benefit from this. This guy put 280,000, told me this is for my daughter. I want to put it in the fund because I want to benefit from that leverage of the group investing. No dealing with banks. They don't want to deal, these investors don't want to deal with banks. They don't want to deal with contractors. They don't want to deal with tenants. They're usually professionals, software engineers, developer, architects, and they like what they're doing. By the way, my architect invested $800,000. He was doing a couple projects for me. He said, Cherif, this is amazing. So tell me more about the fund. And I told him. He said, I saved $1 million. Let me keep 200,000 on the side. I want you to come to my home, meet my wife, meet the kids, meet everybody. I went, met everybody. He wrote a check for 800,000, filling out the paperwork. It's unbelievable. Right? If I don't have a structure, how am I going to extract 800,000 from a guy who's parking it, who's making 3% with the CD, bragging that he went from 2.5 to 3? All right. So he goes up to 8%. So lower risk. When the risk is spread among so many people, so we have better assets, it's lower risk per individual. No hassle, professional management. We get the people to manage the properties. We get the right teams. Cash distribution 4 to 6 to 8%. It's only 6 and 8, by the way, that we do. We don't do the 4. 4 was for institutional. We had some insurance companies, so forget the 4. Cash distributions 6 and 8 annual returns. We pay them every 6 months. Upside potential, if you do equity structures, you want to do that, you can give them upside potential of 70% of the gains. Annualized return with no effort for them. They don't want to do the effort. They're already spending time and effort. My brother-in-law, my sister, they're doctors. They don't have the time to look for investments. They come home, they're exhausted. One is pediatrician, the other internal medicine. They invested with me all their net worth. Why? They can see it's real estate, the money's there is insurance, and there is cash flow. Full disclosure under SEC watchful eyes. The investors like that there is full disclosure there and that you're filed with the SEC. Nobody that wants to steal is going to go and set up with the Security and Exchange Commission. Here's my name, here's my address, here's what I'm going to do, and all this in a private placement. All right. A fund manager's focus. What do you focus on? 3 things. The paperwork, the private placement memorandum, the business plan, which usually when you go to an investor costs it $30,000 to $35,000. I will handle that for you. We handle it turnkey. The entities structure, so the LLCs, the documents that go with it, operating agreement, and all the PPM, private placement paperwork, and the disclosure. What do you have to say by law? Very simple. Once you know it, you know it. You actually point at it. I have in the private placement, we have what's called an executive summary. So when somebody asks you a question, it's 2 pages. You just go over that and you tell them read the rest. Investors presentation. Now that's on you. I train you on how to present one-on-one. I train you on how to present with groups. When you do that after the 4th session, if you want to enroll into setting up your fund, I will show you exactly how to solicit, how you get the confirmation for the money, and how you communicate on an ongoing basis. By the way, ongoing, very little communication. The investors just want the check. They don't want to hear stories. They don't want to hear a lot of what you're doing. Okay, you can update on a website. Property and projects. Now, if you set up the paperwork and you got money from the investors, the 3rd thing is obviously the assets that you're going to buy. So the assets, how to select them, acquire them, manage them, and dispose of them at what point. Those are the 3 things you focus on. Get the paperwork, get the money, get the assets. The assets, you'll have a management team. The paperwork, I'm going to help you. The investors, I'll show you how to talk to people. You got to talk to people. Oh, but Cherif, I'm very introverted. I don't even like to talk to people and look them in the eye. Then find people who, when you talk to, don't like to look you in the eye either. You understand? Be who you are and don't create obstacles for yourself. I remember when I was young, I told myself, oh my God, I'm too young. Oh my God, I'm now too busy because I have the kids. Oh my God, I'm now too... There's always an excuse. Your time is now. People who project things in the future, the reason it keeps getting pushed in the future, like exercising. You know, I was just thinking about it. I keep saying, I'm gonna do more exercising for my legs. I'm gonna do more. And then I realized the more you push it in the future, the more it's not in the present time. So I moved my bench and all this the other day in front. And guess what? All day today, all day, the whole week, I've been exercising. Now my muscles, I feel the muscles. So anyway, waiting for somebody to mess with me so I can show them. No, I'm just kidding. All right, so the business plan. Let's talk about the business plan, the 5 Ps. I'm gonna simplify it for you. The people. When you're gonna set up your fund, and we're gonna take it to the next level, you may wanna do this if you're gonna enroll in the 4 classes, like I expect you to do, because it's gonna be life impacting, just the knowledge alone. First thing is you write, take a piece of paper and write the people. Who will be invested with me? Who will be managing the property with me? I'm gonna go in by myself. I'm gonna go for accredited investors for Reg D 506C. The property, what properties am I gonna make? Okay, I'm gonna focus on, let's say, small hospitals, and maybe medical facilities, maybe retail buildings. I'm gonna look for small apartment building, 8 units and 10 units. I can do these one at a time, raise 200,000-300,000. So what kind of properties, what kind of projects, and what's the potential with these? Number 3, what's the positioning? What's your unique selling proposition? When you present it, hi, I am Cherif Merawar, and I am in the real estate investing business, and I've had a great experience doing this for years. The properties that I'm gonna be acquiring are duplexes that we separate the deeds and we put Section 8 in them. We buy them in the Midwest in Ohio, let's say, and then we get them 3-bedroom, 2-bathroom. We deal with the Section 8, and now we buy them at 70,000 and we rehab them for 30 to 100,000. But once we do the Section 8, we can sell each one at 160, 170. We've done that before. Well, so that's our unique selling proposition is we have the team that can split the deeds so we can sell them separately. We have the connection with the city. We know the programs well, and we have this and that. Performance. What will happen with the money? People want to know. When we raise the money, every time we do raise the money, we have credit lines with the bank because we have a couple duplexes we paid off, so we have credit lines. So we usually get the credit line to rehab, get it all done. We have in-house crew that we've been working with for years that work with us and others, but they actually really like in-house team. And then when we rent, we do this and that. That's what's gonna happen with the money. The profit is we're gonna pay you steady return of 6 and 8% based on how much you invest. So it's extremely powerful for people to actually hear about a business plan. And that's how you do your presentation based on the business plan. So the business model, now that I told you about the definitions, the concept, let me talk about the business model. The business model is really defined here in a few steps. You raise and deploy the capital safely and profitably. You manage the deals to cash out when you sell them or to cash flow. You manage the fund, the compliance and accounting as needed. You pay as projected and grow and sustain. So you told the investor, I'm gonna pay you this, so you're gonna pay him. So you got the deal, you got the money, you got the fund structure, you got everything good. You also have a successful, proven strategy to help you succeed. So I just told you the 4 steps business model. You raise the money, you manage the properties, you manage the fund, and you pay the investors. What about the action? You have to have a proven success strategy. What is your strategy? What have you made money with before? What is making you money now? Get creative deed structure for the PPM. What do I mean by creative? I like the debt fund that gives you steady payments, but I'm going to tell you some bonus thing here. I hope you're listening carefully. Class B shares, we pay from 25,000 to 250, 6% per year. Everybody got that? Can I see you nod? Okay. Class A shares, we tell people if you put 250,000, we'll pay you 8% per year. That's Class A shares. But I created something called the hybrid fund. Class C shares. Class C shares, Allow me by SEC rules to tell people, but if you invest more money with me and you commit to 5 years, you don't cash out your money with a 12 months notice. Let's say you commit 5 years, I'm going to give you 10%. Now you have somebody who thinks it's important, and then they say, well, Susie, I don't want to give you the money like this, and you're just paying me 6 and 8%. I got 700,000 I'm willing to give you. I like what you got. You're filed with the SEC. You know what you're doing. I like your presentation. I just met, your team back there at the back table. You're doing this great presentation at the Investors Club. I have 700. Can you give me more? You can put them as Class C shares. Susie Johnson is coming in with 700,000, and she will be getting 10%. So now you have the hybrid fund. You can have the Class B fixed return, Class A fixed return, and Class C, the fixed return plus a little kicker, because they're going to stay longer. They're going to do something special with you. So you have the opportunity to have the best of both worlds, a hybrid fund that can give a kicker. And I'll tell you more about that when you structure. You get a good attorney to prepare all your documents. I told you it's 30 to 35,000 for the attorneys. Use the most effective marketing methods. I'll show you how those are done. The best ones are actually social media. You pitch your fund and raise capital. You do it one-on-one, and you do it with groups. My favorite one-on-one was I pitched my insurance broker. He called me, he wanted to talk to me about the life insurance and whatever. I sat down and I said, I have a fund, and somebody would be interested in making 8%. He said, are you kidding? We're paying 4% in the insurance thing. I'll send some clients to you. But if they ask you for insurance, can you send them to me? I said, yes. So I provided value. We exchanged values. But I had the structure. I was able to present the structure. Follow the system to deploy the capital, communicate as needed, and grow with your loyal investors. Those are the actions for success. So what are the challenges in having your own fund? Let's talk about some challenges. I don't want to make it look like, oh my God, this is the cat's meow. What if you cannot find the right deals? The answer is, if you can't find the right deals, you have the money, you can't find the right deals, you team up with somebody else who is in the market doing the deals. There is always some other people doing deals, and money is not going to be a problem for them to deploy it, and you create the joint venture with them. What if you have no to low credibility? Just the fact that you set up a real estate fund, you set up a website. We can work with you on the website, by the way, because we know exactly how to do it to be in compliance with the SEC. We know exactly how it is. That can make your life a lot easier, these websites. But just setting up with the Reg D 506C, and you have the link on the website that when they see your name, they see your picture, and they click on it, it links to the sec.gov, and it shows the Reg D, it shows your name. Fund is set up for $100 million. That fund paying investors. Wow, people see it, say, okay, this person is real. Then you start getting assets, you start putting pictures, or you tell them I'm acquiring these assets. You build the credibility as you go. What if you have the deal but not enough money? Well, then you can team up with the people who have the money, because that's the reverse problem of number one. You'll be amazed how many people have the deal, don't have the money, or have the money, don't have the deal. And that's why you're setting up the fund, because eventually you will have more money than needed, but you can control that. And I give you the right in the fund structure to return the money to anybody with the accrued interest, or stop raising money at any time. What if you have them? Okay, how can you qualify for a larger commercial loan? Exactly by setting up with a fund, because you raise a couple more $100,000s and you're able to acquire the bigger deals. So you have the money, you can do smaller deals. As you grow with the investors, you do the bigger deals. How can you qualify for a development loan? I was doing the first time I did development with the fund, I teamed up with a student of mine who's doing developments. I called him, I said, I know you've been very successful. I've known you for 8 years. I have a fund. This was early years. And I said, how are you doing? He said, oh my God, I'm finding these lands so inexpensively. We're doing it one at a time. And I said, why don't you set up a fund? He said, oh, I don't have the time for this. But the banks is now limiting me. I said, I'll partner with you. We did a joint venture. It was one of the best things I ever done. Because in developments, I just send the money, bought the land. They give us the construction loan. So all I did was talk to investor, talk to the lender, send the money, control the entire deal under my real estate fund, and wrote an agreement with him. You will develop and you get so much of the money. And he just couldn't believe himself. He said, you helped me grow my crew, grow my power in that market, and we both benefited a great deal. Development plans could be good, but they're not what you start with. Don't start with development plans because you want to start with some cash flow. Because when you start with cash flow, you may have 10 investors. 6 will tell you, pay me semi-annually, and 4 will tell you, I don't want to get paid semi-annually. I'm in an IRA account. Can you just go ahead and reinvest my money because I want to compound it? And that's when you're going to say, oh my gosh, I thought I'm going to have 100,000 payouts every 6 months, and I have these assets, but I only have 60,000 payout. The other 40 gets reinvested. I can do some developments that will make me huge profits when I'm paying fixed returns to investors. It will change your life. And in year 5, the assets you have held would have increased, debt got paid down, you can refinance, cash out investors, keep that property for your family. Do it for 10 years, you will have assets for your family, you will change the course of your life. I have 14 extra buildings just because of the fund. These are commercial buildings. I didn't need them, I already had 16, but I told you in life, you can't help opening yourself to the world without the world coming to you. If you're sitting home, how are you going to meet anybody? But if you're out there with the structure, talking to people, things happen. Some people make them happen, some watch them happen. Some don't even know what happened. Okay, so how to structure the fund? People get confused. Challenges in having your own fund. They don't know how to structure it. I'll show you. I already gave you a lot of it. The 25,000 minimum. You don't want to deal with less than that. You do the debt fund with 3 structure, class A, B, and C, with the hybrid structure. How to get better bank loans. You get better bank loans by showing them your real estate fund and you've been up and running for a year. World of change. How do you do joint ventures? You get the proper paperwork, everything in writing. You clarify what they do and what you do. I usually put it all in writing. Those who set up with me their funds, I show them exactly how to do it. Set it up with me and my attorneys. How to raise capital from the accredited investors. That's usually a hurdle. People don't know how to do it. I'll show you the lingo. I'll show you how to talk to them, how to make it interesting for them. The wealthy people want something with no hassles. They want something with credibility. They want something where they feel comfortable with the person, and there's nothing more comfortable than you actually do this with a filed fund. All right, how do you protect your fund from lawsuits? We have an asset protection structure that we can go about. How can you accept non-accredited investors? By the way, those who set up an accredited fund, sometimes they say they want a second fund that's non-accredited. All right, shortcut to success. You can become a real estate fund manager, focus on building your investor database, raise the capital, grow your credibility, learn how to structure with creative PPMs, and then decide equity or debt. I suggest debt fund for you, deploy the capital and grow with your investors. So you'll have an instant credibility with a $100 million fund. The process works. Exemption rules of the SEC will be explained to you. Grow your relationships. I want to go right into what we're doing with you. Those who want to do this, I would like you to know we're going to be doing 3 sessions of training and 1 session of full Q&A. Even though during the 3 sessions we answer questions, but I have a bonus session at the end the last Thursday. So this coming week, Tuesdays and Thursday, and the week after Tuesday and Thursday, it's going to answer all your questions regarding how to set up a fund, what kind of deals you can put in them, what kind of payouts you can do, what's approved, what's not approved. Those who enroll tonight to do this, I told you it's $199. You can immediately get access to the actual video on the website, access to the university. It's a comprehensive library to turn you into a fundraising pro. You can see my success stories online. You can see this works. Those who want to do this, you'll get client support. We'll answer your questions. That's the whole idea of the training. And on session 4, I communicate directly with you so I can answer any of your questions. With the university access, you will get my effective and straightforward business plan using the 5 Ps that I explained to you. You will learn how to raise the capital step by step. You will have expert online training, 2 days. I have a whole training I've done 2 days. This training was several thousands of dollars, okay? It's 20 hours of modules released after session 4. Once we finish the session 4, you will get that part. It talks about the definition, concept, business model, and action for success for raising the capital, how to structure your fund, what responsibilities you have as a fund manager, what their responsibility is as investors, case studies of numbers on each deal and how to structure the right deals and go creative with your mind with what you have, how to market to accredited investors, how to pitch them, that means present to get the money, how to manage a fund, and how to scale your real estate business by raising the capital and doing it with integrity, safely, and ethically. You're going to have checklists and resources to automate it. You're going to actually learn from the masterclass that I'm doing on raising capital, and you get the whole 4 sessions. I mean, the value of this is several $1,000s, and I'm telling you right now, I'm giving it all for $200. People paid $3,000 for the live training alone that I'm giving you. The actual masterclass, we used to do it for $1,500, and that whole training program is valued at $5,000. I want you to join me. I have certainty that if you really want to take your game to the next level, this is what you need. So what is our USP? I've been 20 years experienced in the investing and training for syndications and for fund structures. We have over 2,000 video success stories on YouTube. You can see for yourself. We specialize in real estate fund structures. I get you set up turnkey. So learn for the $200 how it's done. We offer it all to you. We add to your credibility by doing joint ventures with other people that got set up and other people out there. Help you raise the money incrementally till you reach the critical mass. We show you how to even do the paperwork when you're set up. And you will use my attorneys. And my attorneys, unlike any other attorneys, they're not just set up. Like the lead attorney is who you're going to get because he made himself available for us. But the key thing is, in those 4 sessions, you understand how we structure it with the attorneys. There'll be no surprise fees. There's nothing ongoing. This is a one-time fee, and that's how we do it. So you can understand step by step how it's done. So those who want to do this, I want you to get going. Immediately contact Ashlee. Ashlee, let me see, where is Ashlee's info? Ashlee at cmrei.com. Ashlee is ASHLEI. Let me see here. Sorry. Ah, here it is. Here it is. Sorry. Ashlee, ASHLEE at cmrei.com. But I think if you go to the actual chat here, you're going to see the link to be able to enroll. So the link is right there. It's pretty simple. $199. Just put your credit card or something. If you prefer to call Ashlee, which I don't know why you will call her, but if you prefer to call, 1-844-720-1031. 844-720-1031, and you can call her right now. Or you can email and say, okay, I'm in. But I think you just click on the link, enroll, and I'll see you on Tuesday night, 7 p.m. Eastern Standard Time, 4 p.m. Pacific Standard Time. I'll take a couple more questions as they enroll here. Ashlee, are there any questions left that I haven't taken?
Yes, we have a question coming in on, Cody said, do you file JV agreements with the county or anything like you would with the deed of trust or a mortgage, or is it just signed by both and each gets a copy? And I believe he's talking about when you were discussing your JV agreement that you give them.
Oh, so the joint venture agreement, we don't file it with anybody or anything. I drafted the JV agreements with my attorneys. I've seen what works and what doesn't work, and I tweak them. And no, they don't get filed anywhere. And you know, when you write an agreement with somebody, you want somebody credible. You want somebody who's been doing it. You want somebody who's got a lot to lose if they don't do it. So they have to have skin in the game. In one of the last joint venture agreement, the contractor put $2.25 million with me. I put $2.25 million. He put $2.25 million. We bought a property at $9.5 million because he's an excellent contractor. And he said, Cherif, this is going to be so profitable. I can do it faster. Let me go in with skin in the game. I couldn't believe it. The guy had $2.25 million, had just sold the property. We went in. So you will see how it works. I'll show you in details.
Very good. Aiken said, how can you afford such a high return if cap rate property offers it 6 to 7%?
Well, I just gave you the example. For example, retail. If you buy McDonald's with a McDonald's in it, a building with a McDonald's in it, you're going to get it at 5% cap. That means if the property makes $50,000, you're going to pay $1 million. But let me tell you something. That same property, when I see it vacant, I put it under contract at 500,000 or 600,000. It's sitting vacant. They have payments. They have nobody in there. It says available. And I put it under contract and I start smiling and dialing and I look for the big tenants and I offer it to them. And if no tenant calls me, I take it out of contract because I have 45 days due diligence and 15 days to close. No risk. That's my due diligence. I take my money out and I'll go on and look for another one. But when I have a system, I know how to do it. And once actually the tenant says, yes, we're interested, like we signed Fat Tuesdays for a building, I got the building 700,000. Fat Tuesday signed and the building is worth 1.5 million. Are you listening to me? I put it under contract 700,000. They signed, they just asked for 3 months free rent and 50,000. So really my total cost was 750 plus 3 months free rent. Property is worth double. I can sell it or I can keep the cash flow. What do? I refinance it and cash out the whole 750. So I have infinite rates of return on endless streams of income. That's economic immortality. I don't go the normal way. Do you think people set up real estate funds? Do you know that 60% of the United States are illiterate? They can't even go past 6th grade education to read a book. You have so little competition. You have a real estate fund and you're in real estate. All you have to do is talk to people. Okay, I got too excited by the lack of competition and knowledge out there that I've been disseminating for how many years? 25 years now. Okay, anyway, all right. You have huge potential.
Just a couple more questions. Joe said, are we able to take retirement account IRA money within a debt fund?
Yes. In a debt fund, you can take self-directed IRAs. And once you're set up, once we finish the 4th session, if you want to set up your fund, we guide you through which IRAs are the best to deal with. Ashlee has become an expert in that, actually. How to fill out the paperwork for people that want to invest through their IRA, because they fill out the form, but then the IRA custodian has to sign. Additionally, 401ks, they can borrow up to, I believe, 50,000. I believe, yeah, they can borrow up to 50,000 and invest the money. And then they have to pay it back through their paychecks. So they can actually pay themselves interest and deploy, these people can deploy the money into your fund.
Very good. Next question is, will you be reviewing how we market and pitch on the 4 sessions?
On the 4 sessions, yes, I will talk about it. I will even show samples of like the pitch I do for like 60 seconds if I'm in an investors club and they give me like 3 minutes. You have 3 minutes on the stage. They do that like I was at investor club. They say, you have 2 minutes on the stage. And then everybody was complaining, so they gave them 3 minutes. I came up, I did my presentation, 1.5 minutes, went to the back table, everybody came to me. I'll show you exactly how I say it. I'll show you also if you want to send it on a postcard. And then the rest of the advanced training is once people enroll if they want to set up their own fund.
Very good. Next question, will all the sessions be recorded and do we get access?
Yes, we record all sessions. Everything I do, I record. Everything I say, I record. I have not 1, but 2, but 3 MP3s. Why? Because everything I do is recorded. And each one is for a different type of thing. So some are for my deals, some for the joint venture stuff and all this. But the point is, it's all recorded. But I advise you, come on the calls. If you miss one, it's okay. You can catch up. But I want you on the call so you can ask your questions, because the question will come to you when you're there. I want you to learn. It's nothing like comprehension. You will be like a giant in the real estate investing.
Mona is asking, will you teach about fund of funds on the 4-session masterclass?
Yes, I will teach about fund of funds. But what I want you to understand is fund of funds is when other people set up a fund to raise money for someone else. So I'm going to show you how you don't raise money for others, but I'll show you how you're going to be structured for others to raise money for you. And as a matter of fact, I mean, we have a bunch of people here. Maybe 2 of you, maybe one will tell me, Cherif, I have a great capacity to raise capital. Like there was this guy, he has endless connections, but he said, I'm not so good in real estate investing. Oh, okay, wait a minute. I have this other guy who's amazing in real estate investing and doing loans and doing this. What if I team you guys together? This is the power of networking. An attorney, I'm going to tell you something. An attorney will not even go through doing. They do basic fear pitches and ideas, so you can come and draft a PPM with them. I'm an investor. I'm the guy that raised the money. I'm the guy who deals with the structures and the investments and the results of investments. And I also have a team of attorneys that help us structure the deals the way we know they work. And the team of attorneys we work with do litigation, not just structured funds. So compare that to anybody else and you'll see the reality on the subject matter. I'm very proud of that.
All right, 2 more questions. Dave said he's investigating and looking for lawyers. He likes the fact that you are teaching this class, but his lawyer is telling him to do a syndication first before considering a real estate fund. What are your thoughts?
Okay, so without taking a cheap shot at the attorney, most attorneys will tell you, why don't you start with a syndication? Why? Because when you start with a syndication, you put one asset and you have momentum. What ends up happening is you have investors wanting to invest more money or something. Guess what you're going to do? You're going to go to the same attorney. Can you set up a second one? So now they got you for 35,000 or 30,000. Now they're going to tell you the second one is 25. Oh, now you need a third one. Of course, they're going to say syndication first. Why? Because that's how they make their money. I'm setting up with the real estate fund so you can raise money for 1, 2, 3. It's an open-ended structure that's approved by the SEC. You raise money on your own terms. You just need a bookkeeper to maintain an Excel sheet. Even those who set up the real estate funds with us, we give you a sample Excel sheet to show you how to can keep track. Your bookkeeper will make it so easy for people. We've been doing this for years. It's not like our first time setting up.
All right. And Cynthia's question will be our last question. She said, will you be reviewing investor qualification questionnaire, subscription agreement, and final offering package that goes to any of our investors?
No, once you're set up, you'll have the knowledge to be able to do that. You'll have the ability exactly and very clear on what you are doing with the investors. And that is my goal. Otherwise, I failed. However, I do answer emails regarding, oh, we're doing this, this happened. What should I do? This. So when it's coming to the investments you're doing with the fund or some disclosure or something, yes, we answer your questions. We help you. You'll even have a direct rapport with the attorney to be able to then on your own, if you want to do things additional, like you want to file your fund in another state as well or something. I'll explain all that in the next 3 sessions. You'll see how it works.
Very good. That is it. I think you've answered all the questions, Cherif. Thank you so much for your time tonight.
I look forward to talking to you next week, Tuesday. Ashlee at cmrei.com, CMREI, Cherif Merawar Real Estate Investing.com, 844-720-1031, or just click on the thing and enroll online, and we'll see you next week. All the best, guys. Thank you so much. Thank you. Bye-bye.